Welcome, dear brothers and sisters, to Elliot Wave Master Course Beginner Part 4. In this part, we are going to learn and look at the different types of ABC structures. What are the structures and how they form, right? Different types of ABC. It is a three-wave structure. We have already seen in Part 1 how the combination of 5, 3, 5 plays out in nature as well as in the markets, right? So in your three-wave structure, your ABC, the first type is your regular ABC. Now, I've told you so many times that the market is fractal in nature. The bigger time frame, smaller time frame, it does not matter. Market will keep forming, repeating the same patterns on every level of your market structure, right? So in this image of a blank chart, can you identify a pattern of ABC? Right? So good. Many of you know the right way. You can see that this is an ABC. Now, what is the theory behind it? Like I said, an ABC pattern or a correction pattern, it connects your two trending moves, and it is a connector between your two trending moves. Your ABC pattern or any correction pattern connects two trending moves. Now, like I told you earlier, it can form on very small time frames also. Like this is a drop here. This is an ABC pattern which you cannot see here, but again it is connecting what? Two trending moves in the market. This stage here also is an ABC pattern. It is connecting two trending moves. Now take a look at this point here. Market gave a rally, paused as an ABC pattern, right? And then started to move higher, right? So in the next leg of the move, you can see here a trending move up, right? And ABC pattern and another trending move. So this is wave within a wave, sub-wave theory. You will understand in the intermediate stage. Right now, what you're looking to understand is what is a regular ABC. Okay. From this image, it is very clear to you that wave B has come and retraced some part of wave A, and then wave C has gone and broken the swing low of wave A, right? Very clear till here. So let's have a look of what it actually is. So as per rule of a regular ABC, now the name itself is regular, meaning it forms very regularly in the market. You can find this almost on every time frame. Most of the time you will find this pattern. It's a very common pattern, right? ABC structure. So what is the meaning of this regular ABC is that the first initial correction stage, the first leg is A, right? Then your wave B starts. Your wave B goes up to your what? Around approximately from here to, it can go to 60 to 70% retracement up to there. All right, your regular ABC, your wave B will terminate within 60 to 70% of your wave A. Okay, it always goes into the retraces, always into the range of wave A, and then it starts the next leg down of wave C. Now, wave C is usually an impulsive move. It traps all the retailers and your favorite YouTube analysts, your Twitter analysts, or wherever social media analyst. They come and suggest that, oh, yes, the market is gone. It has broken the previous swing low. This is the time you want to buy, sell the market. This is a good breakdown. All this, they come and suggest all this kind of stories. They sell these stories to a poor retailer who does not understand the market structure. Even the analyst himself does not know what is happening, but he has an audience which he has to keep them updated and entertained. Anyway, let's get back to the point of ABC. So we know that an ABC is forming after the wave C is completed. We are going to see a trending move. So let me just take you back one step to the previous image. Same thing here after the wave C, which is completed, which came in a very fast fashion. Everyone is thinking market has gone. It is going to break the swing low. Level has broken down. Let's see if the market breaks here. Let's see if the market reaches here. This is a time to sell. But we know after a trending move, we saw an ABC structure, and then we are going to see the next trending move. Now, how to calculate till what your ABC level is going to go, that you will learn in the intermediate stage. But first, you must clearly understand what is actually happening in the market, which structure is forming. Only then you want to go to the next stage, right? All your important points, please note it down in a notebook, take your screenshot from wherever you think it is important, or the best way, type it down in the comments, leave it for yourself. You can even leave the timestamps for yourself so that when you come back, if you have any queries, you can come back and revisit the exact timestamp of that video. All right. So in a regular ABC, if the previous trend is bullish, if your previous trend is bullish, this is what it looks like. Okay. Your ABC, this is what it looks like. If your previous trend is bearish, the market is falling down, your A, B, C correction looks like this. So rules apply same for both. We can expect in a regular ABC price to come back to your 60 to 70% range of A. Expect till there. It can terminate anywhere because wave B, like I said, is the most dangerous one. It can fall, it can go immediately sideways. So in a regular ABC, it can go all the way up to 60 to 70% and fall. This is the most common pattern of ABC. The next pattern we are going to see of ABC is called an irregular flat pattern. This is called a regular flat pattern. So flat in the name itself, it's just this is a complete sideways correction. Now this has an important gem which I'll share with you. First, you have to understand what is happening here. So the difference between the previous regular ABC and regular flat ABC is that your wave B can retrace up to 90% of wave A. It will not cross the wave A, but it can retrace approximately 90% of the wave A, right? After that, your wave C will start. So how do we identify this is very important. You will never know what wave B is going to make, but where it terminates is very important for you. And from where the wave C starts, it's more important. So in advanced concepts, you will have some extra ideas to understand, yes, the wave B has terminated early here, or it is going to terminate here, and you can prepare for the next move of wave C. In your intermediate stage, after a wave B is formed, you can calculate the level or the direction, the length of wave C. Here, the most important part I want you to take note, write it down or put it in the comments for yourself, is that a regular flat pattern in your textbooks, like I said, you cannot read a textbook and learn driving. It's same thing with trading. Trading, you cannot read any textbook and come and think you are a master trader. You need to have some experience over your belt. In that case, in that regard, what I'm trying to say here is that in your textbooks, a regular flat pattern, right? It suggests that in a regular flat pattern, market, give me 1 second. The up move, this is your wave A, then your wave B. It goes all the way up to 90% of wave A, does not cross it, and then your wave C, right? So your textbook suggests that wave C will form a flat correction like this. This is your flat correction as per textbook. But in real market scenarios, what happens is wave C has no limit. Okay, you must keep that in mind. Wave C does not have a limit in this regard of regular flat. It can easily break the low of wave A. Okay, it can easily break the low of wave A. So now all your textbook analysts on Twitter, social media who think they're smart, what they do is they see the textbook, oh yes, wave C cannot break this part. Wave C, if it in a regular flat correction, it cannot break it. If it does, then it's something else. It is some important wave which is going to fall down. So they will start shouting, yes, the market is going falling lower, careful in your position, so whatnot and whatnot. But we as an analyst, we know that this part of wave A in a regular flat can be broken. Keep that in mind. It can be broken. So what you have to do is you have to study wave C separately. All right. Do not keep any fixed idea in your mind that wave C, this is only going to happen. Okay. That is what your amateur traders do. Right now, I'm telling you, like I said, this is a little bit different. This is not a textbook analysis. When we study your wave C, you will understand this is the internal structure of your wave C. And when this is over, market will start its next journey higher. Okay, so this is a regular flat pattern where wave B retraces up to 90% of wave A, and wave C can again come and touch your wave A. It can also go beyond it. That is what you have learned. Okay, just a graphic example for you. Wave A, the initial down move, wave B reaches almost up to 90%, right? Wave C, the impulsive move, which traps everyone. It can break, it can also break wave A. In textbook, it suggests it can't or it's equal to wave A, but in reality, it is best practice that we study wave C separately, right? Internals of wave C. So internals of wave C, you will understand in the intermediate stage how to calculate subwave theories and all that. So right now, you're studying what is a regular flat pattern and what are the possibilities. So in a regular flat pattern, if your previous trend is bullish, this is how your pattern looks like: A, B, and C. If your previous trend is bearish, right? If your previous trend is bearish, this is what your regular flat pattern may look like in the market, right? The next part, the next flat. So first flat was regular, now is irregular. So irregular, by the name it suggests, it is not regular in the market, meaning it will form very rarely. It does form, but it will form rarely. Okay, every correction, every ABC will not be irregular. The regular patterns was what? A regular ABC, a regular flat ABC. Now we are in the next flat called irregular flat, right? It makes an irregular structure in the market. It's very hard to identify, but once you understand it, you will be able to clearly identify when it is possible to make an irregular structure. Here you can clearly see that your wave B has broken your wave A range. It retraced, it has broken your wave A range. It has closed or made a low below it, right? This is the irregular part, and since your wave B gets extended a little below your wave A, your wave C becomes shorter than the length of wave A. So when this starts to happen, when B is broken below A, you have to keep that in mind. Yes, it's possible that wave C can come within the range of wave A again and terminate. If it terminates within the range of wave A, it means it is an irregular flat pattern. Now, what is the importance of this irregular flat? Why are we studying this separately? Why does it matter to us? We'll study that in the intermediate stage. Why irregular flat pattern is a high probability setup, right? We'll study that in the intermediate stage, but now you're just beginning to understand what is the meaning of irregular flat pattern. So just a graphic example, your initial correction move is wave A. Wave B breaks the low of wave A, and then we go and terminate within the wave C of, in case it's irregular, we will terminate the wave C within the range of wave A. It will not break the high or the end of wave A. Okay, it will come and terminate it. This is your irregular flat pattern. Okay, in a previous bullish trend, it will look like this. It will try to make a false high here and then drop. So this is where your amateur traders, they think this is wave 3, this is wave 4, and this is wave 5. And the market, they keep coming to the market on social media platforms, to their followers, their subscribers, whatever they tell them, market is going to fall down, it is not going up, yada yada yada. So what happens here is that they have not enough practice. They are just doing it for the sake of followers. If you really understand market structure, if you really have practiced enough, you will understand this is a possibility. Okay, you will keep that in mind, that this is a possibility. Market can happen, market can make an irregular flat pattern ABC and start to trend. Yes, there are specific ways you can calculate it. You will understand by the internal waves of this. You will understand, yes, this is going to happen, irregular flat pattern is going to happen. In the advanced concepts, you will calculate exactly, you will know when this kind of pattern is going to finish. Okay, that is what we want. Why do we want to understand this? Again, irregular flat patterns are high probability setups. Now, what is it high probable for? That you will learn in the intermediate stage. Now, You just have to understand what is an irregular flat pattern. Okay. So in a previous bearish trend, if the move is downwards, right? If the previous trend is downwards, your irregular flat pattern looks like this. And in this part, I have made some mistake. I want you to identify the mistake and put it in the comments. Okay, I have left you a clue here. There's a mistake in this. Kindly find it and put it in the comments. Let me see if all of you understand it or not. Now, expanded flat. Your expanded flat pattern A, B, C. This is the last flat pattern. First flat pattern was regular flat. Then we have irregular flat. Now we have expanded flat. This is a very, very rare pattern, and it is the most confusing pattern for many, again, so-called analysts on your social media platforms with big followings, right? They don't know what is happening. But what do we know? That this is a possibility in the market. This is a possibility, and how do we identify it? Very simple. Your A wave, first your B wave will go and break the high. It will break the high again, and later on again it will come and break the low. The C wave will come back and break the low of A. So what happens usually, what kind of sentimental analysis the people do, or the sentiment news flow you will get in the market is, people will think that this is your wave 3 first, this is your wave 4, and your wave 5 is done. They start telling people that buy my course, this is wave 4, this is wave 5, it's done, and we are going to fall down further. After it comes back a certain distance without crossing the previous low, what it has done, it has gone and broken the previous high. So at this stage, what they do, oh yes, the market, we have got it wrong, it is going up, they give targets, it's all bullish now, 100% bullish, so. And what suddenly the market does, it goes and breaks the previous swing low also. So here, people, their analysts, the TV analyst or the YouTube analyst or the Instagram, Twitter analyst, they will just change their views every time market changes direction, right? People who are following them, lakhs and thousands of people who are following them, they are the one who are in real trouble, because they don't understand the market structure, and they are putting their hard-earned money on the belief that someone is guiding them. But that someone, again, just to keep his audience entertained, they're just giving some random gibberish targets without understanding market structure. That is why you, as a trader, as an analyst, you yourself are here to understand the market structure. So these are very rare structures, and once they happen, it will most likely shake out all the traders. This is where your risk management and patience comes to play. Here at this stage, when the market starts to break this low and this low, the targets will start flashing of lower, very low targets. Oh my God, the market is going to crash. So once this A, B, C pattern is played out, we know that market is going to make a new high. Why? Why do we know this? A trending phase is coming, because A, B, C patterns, like I said, they connect two trending phases in the market. They connect two trending phases. That is what is the purpose of ABC. Whatever time frame you take, they connect two trending phases in the market. So your graphic example for your ABC expanded is that your A is formed, your B goes and breaks the high, and C again breaks the low, right? It can break beyond it and close. That is the expanded meaning. It expands on both sides. Now there are some certain ways you can calculate it using your advanced concepts, right? In your intermediate stage, you will learn how to understand the internal structures, and you can calculate the length of the wave, right? Expanded flat, if your previous trend is bullish, this is how it looks like. And if your previous trend is bearish, this is what you will see in your expanded flat. Now, after this ABC patterns, there are some patterns like double zigzag and triple zigzags. This zigzag patterns, what is the meaning of zigzag? You'll see a lot of people saying market is making a zigzag structure. What does that mean? This you will learn in the next part. So I'll see you in the next part.